this is a Frankenstein monster then. So as parents give more, as the price starts to go up, parents give more gifts, which drives the price up higher and higher and higher. And then everybody's screaming about the prices are so high, there's no affordability. So this is going to become the norm now, where parents are going to have no choice.
Welcome everybody to your edition of Investor Market Update. This is the November edition, and me and Brian are going to be deciphering the data that we have from the market and all the other stimuluses in the market. You have myself, who's a real estate broker, who's in the trenches every day in the market, and Brian, who is a investor and a strategist and a coach. And we will be able to give you our opinions on the market and why it's reacting the way it is. How are you, Brian?
I'm doing fabulous, Omar. And I got to tell you, I'm really looking forward to some of the topics that we're going to be covering this month. Like, I feel like I'm on top of what's going on in the real estate industry, but I honestly had no idea about a couple of the things that we're going to be discussing, that this was going on in the marketplace to the level that it's been going on the last few months. So I'm super excited to dive into some of these topics, to share this. The people out there need to know about these things. If they're considering buying a property or buying an investment property, the stuff we're going to be talking about is exactly the kind of things people need to know. So yeah, let's dive right in, man.
I couldn't agree more. So what were we going to talk about, in these next couple of episodes? Well, today we're going to talk about FOMO, which is fear of missing out, and the effects of some of the one stimulus is the gifts that are being given by parents to first-time buyers. We're going to talk about in future episodes, we're going to talk about the reemergence of investors in the market. We're going to talk about the potential effects of the interest rate and the pressures that are being felt because of the low supplies. We're going to go through a very deep dive in the stats and go through specific property types and specific cities. So today we're going to start off with the fear of missing out. And we're going to start it off with talking about the affordability, which is, as you can see from this graph over here, Brian, it is getting harder and harder. And I took two lines, one on 2015 and one in the end of 2020. And you can see that there's almost a 10% increase in the requirement for affordability. So it's just getting more and more difficult, Brian.
Yep, and this is the first one that I was most sort of excited about to share with people. Is this, as we start to go through the numbers and share with them what has been going on, but like you've got at the bottom here, purchasing power versus the cost of ownership. That used to be that's what kept prices and sort of kept things in line. And now we're breaking away from this. The complaints that people have had about affordability in housing, especially in the big markets like Vancouver and Toronto, they're only getting worse. And the reaction that people are having to this is only going to exacerbate this problem, in my opinion. So yeah, let's start showing the people out there exactly what's going on and what effect we think that's going to have on the market over the next couple of years.
Yeah, so the first thing that comes to my mind is when you start getting to a place where the affordability limits are being pushed, just like now, you start to see a little bit of a shift in the market where people will start to look into more affordable alternatives. You start to see a little bit of a slowdown in the higher price points, and some people tell me, is the market going to weaken because of that? If we compare the market to March, for instance, we'll see that the market has gone down a little bit, but that's not because we're in a weak market. It's slowing down because it's a strong market. It just can't function any higher at any higher level. And this is a very strong market. It still remains very tight. And so the next thing that we're going to talk about is, because of that, we've seen a small distribution, a change in distribution in affordability. And what this chart demonstrates over here is we look from 2016 to 2021, you're looking at, in the yellow bar there, you're seeing first mortgages, and the white one you're seeing second and third mortgages, and in the blue one you're seeing fourth mortgages. Notice that in 2021 there's been a major increase in first mortgages. You see that, Brian?
I do.
And you can also see, a very big difference between 2017 and 2021. A lot of people try to compare to 2017 because they see the increase in prices. Look at how much more, people were buying fourth mortgages, getting fourth mortgages, and getting second mortgages, and it's a lot more stable now. And the main, there's a lot more people buying principal residences, which are people who are moving up. And again, between 2019 and now, you can also see an increase in people who are investing, people who are spending money on investments. Do you have any thoughts on this chart?
I love something like this that demonstrates it, because you're right. The media is always jumping up and down, screaming about how nobody can afford and get ready to rent for the rest of your life, and we're in a bubble and blah, blah, blah. And then you look at these types of things and you go, oh, holy moly, look at the number of, like you said, fourth mortgages that were going on back in 2017. And now we look at it today and it's a much healthy number, right? From 2019, we saw an increase in 2020. We saw a little bit of an increase in 2021, but it hasn't ratcheted up. And yet, as you said, first mortgages have. So that says that more people are qualifying, more people are able to be buying their first home, and right, and getting into the marketplace. So it looks much healthier than the situation did in 2017, when arguably now some people still say we had a bubble then. Of course, there was a difference because of the stress test that moved in by the government. But yeah, a much healthier marketplace. And that is, as you said, because things have gone down since March. It's stabilized a bit. So we're seeing a healthier market. And that all tells me things are going to probably continue the way they've been going for a while. And that's exactly the kind of articles and things that we've been seeing go on. But then there's this whole other element, which I know we're going to dive into next, about how are people managing to get houses, even though the prices continue to rise so dramatically.
Yeah, it's that's the big question, right? Oh, prices are going up so much. How do you afford houses? And I call this the multi-generational income detachment, where prices are being detached from income. There are many other factors that people don't take into consideration. For instance, the home equities, and how much equities are people building, the gifts from parents, guarantorship and ownership. You have the multi-property investments, immigration, foreign investments, and there's just a lot more. So it's not a two-dimensional relationship between affordability and price. There's a multi-dimensional relationship, and something seems to have hit a critical mass in today's market, and something seems to have moved things disproportionately, so that we can see these kind of price ranges while we know very clearly that incomes have not increased. And that's go ahead.
I think you hit the nail on the head with something that you said a little bit earlier, and I'll let you finish your point, but I just wanted to jump in there. And you said there was almost like a decoupling between income and the prices of housing. And we're going to talk more about what exactly is going on there, and how this could be very dangerous for the real estate market in the future, especially for those that are trying to get into it anytime soon.
Yeah. It's that's what it is. It's a decoupling. And
what does that mean? Tell us what that means, Omar. Of what a decoupling of what? What are you talking about here?
So the relationship used to be predominantly income. Income goes up, affordability goes up, and prices start to go up as well. Nowadays, with hitting that critical mass in equity, where so many people have amassed hundreds of thousands of dollars in equity. Some people, more than ever, you have millionaires that are just becoming millionaires because of home ownership, right? Where they've either paid off their properties or they've paid off a substantial amount. These people are now able to dip into their assets and buy multiple properties or assist their children, and that's changing the entire formula.
But surely, like, this has always gone on. why is it all of a sudden a problem? Like how big is this of this going on where parents are dipping into the equity in their existing home or into their retirement or all that in order to help out their kids? How big is this?
So let's explore that question. Let's explore that question by looking at these different charts over here, right? This is a chart that I love because it depicts the first-time buyers' gifts, and you can see it in two different measures. You can see it in the percentage of first-time buyers that are getting gifts, which is on the chart on the right, and then the amount of the gifts. You can see that the amount of the gifts right now is an average of $80,000. And you can see
that's
how
a
much
Canadian average. That's not even we're not even talking about Toronto and Vancouver yet. That's just a Canadian average, right?
I believe that's the Canadian average. Yeah, that's the Canadian average of $80,000 and per gift for a first-time buyer. Now, you ask me why now. It's like that's what we were talking about, the critical mass. Is like now the equities reached a point where these parents are able to lend out gifts of that magnitude. When prices were what they were 5-10 years ago, and the growth in the prices was where it was, people couldn't afford to make these kind of gifts and these kind of investments in their children's futures, right? So that's a big reason. That's a big reason why. And another really interesting fact is you can look at the pace of growth of these gifts, and you can notice that these gifts are actually outpacing the growth of the market. So,
oh my goodness.
So
this is a Frankenstein monster then. So as parents give more, as the price starts to go up, parents give more gifts, which drives the price up higher and higher and higher. And then everybody's screaming about the prices are so high, there's no affordability. So this is going to become the norm now, where parents are going to have no choice but to gift money to their kids. Because as you said, the prices have not nearly as much relation to the income of the people who are buying. It's based on the amount of money that you're able to put into the deal, and if your parents are able to be a guarantor on your mortgage. Omar, this could completely change the landscape for real estate in Canada, again, especially in the two big centers, Vancouver and Toronto, where if you don't have wealthy parents with a whole bunch of equity in their house or a retirement fund they can dip into, you're not going to be able to buy a house.
You're almost completely correct. I mean, when you were talking about the depiction of price and how it's going up, you're showing a linear growth. What is actually happening right now, Brian, is there's a parabolic growth. And because of these additional factors, these meshes, they weave together and they create, like you said, this very difficult predicament for first-time buyers. And there is a reason, there's a way to be able to enter the real estate market, but it's no longer going to be buying your first home. A lot of people are maybe forced to buy their first investment property, which is an entry property into the market, and then experience some of that growth. But we are seeing these factors propel the growth in the Toronto market. And what's really fascinating is it's not only happening to first-time buyers; it's also happening to move uppers. If you look at the amount or the magnitude of these gifts, it's even higher for people who are moving up, where people are getting today an average gift value of around $120,000. And we do see in the chart on the right side that the number of these gifts may be decreasing a little bit in comparison to 2018 and 2019, but the size of these gifts is increasing because, again, the equity buildup in people's houses is hit that critical mass where you can do that.
Wow, this, as I said before, you can't underestimate the effect that this could potentially have. Now, things tend to even out, but I see this, like, look at that rise on the chart on the right, the average gift going, yeah, it kind of peaked there in 2017. Again, the last time we saw something like this around 100, but now we're shooting for, and I read an article the other day that you talked about, it's not just first-time home buyers, it's people that are up-leveling. So maybe they started with a condo or a townhouse, and now they're going into a detached single-family home in the suburbs. I read the other day that can be in the 300,000 range. Yep. That the parents are having to gift for younger families in Vancouver to be able to get their dream home in the suburbs. $300,000. And that means that these parents are probably now either doing that through a HELOC or an additional mortgage. If they had their property paid off, now they're actually adding more debt to that property in order to help their kids out, or they're clearly taking it away from their retirement savings. That's going to cause a whole other host of challenges going forward, which I know we're going to talk about in another video about interest rates. But I find this whole thing fascinating. I'm very curious to see where it's going to go. And in my mind, what I start to think about is what other, like you and I have talked about this before, compared to other cities around the world, other like Toronto or Vancouver sized cities around the world, Canada still has relatively cheap real estate when you compare it to like London or Paris or New York or Tokyo or Mexico City or something like that. Canada actually was still relatively affordable, which is why a lot of foreigners wanted to buy here. But this seems to me like, well, now we're going to be starting to move into that type of echelon where the only people who can afford housing, like in a London or in a New York or something like that, are going to be people who are already, you know, have a net worth or a wealth or something that they're able to tap into to be able to buy these homes. So this is fascinating to me, and I'm really going to want to see what happens over the next couple of years. And of course, it's a reminder to me that, hey, if you're thinking about buying any real estate, especially for investment purposes, the longer you wait, the harder it's going to be.
Exactly. And it is becoming more and more evident that the market is going to continue to go up. You did mention BC. BC was the second fastest, growing and receiving these gifts, just followed by Ontario, which is the frontier here. And it's that's kind of a big reason why people are jumping into the market. They're seeing these prices go up. They don't want to miss out. They feel like, they have to. It's not that they want to. They feel like they have to. They have to move in because the increase in prices is so much. So what kind of advice do you give people who are going through this emotional discourse, this feeling of like, if I don't, I won't? So what kind of advice?
That's a great, I'm going to use that expression. If I don't, I won't. That's, I think a lot of people are just like the FOMO, right? That's the anxiety. If I don't do this now, I'm never going to be able to. I won't be able to. It's tough because I get it. I get why parents obviously are wanting to help out and doing these gifts. And if I was in that situation where I had a child or, who was ready to buy their first home, I would probably do the same thing. Of course, I would look to help them. So I completely understand why it's happening. But I'm concerned about what's going to go on in the next couple of years. So, I mean, the advice that I give to people is you never want to overpay. It's not like you should just, because of FOMO, you should go rushing out and overpay to buy a property. That's still reactionary investing. However, if real estate is something you want to have, either for a principal residence or for a cottage property or something like that, or an investment property, then, and I think you said this on one of our previous videos, buying something that you can afford now, so that in a couple of years from now, you will be able to participate with some of these other people when you now do have equity that you will be able to utilize in order to do a larger down payment, in order to afford something a little bit bigger, in order to qualify better by bringing down that loan to value ratio if you can do a bigger deposit, right? So anybody who's thinking about doing it, get serious. If you're going to wait another year and hope that the landscape is going to be better and prices are going to be lower and the bubble's going to burst, and of course we're going to talk about that more with supply and demand, and when you dive into the numbers, I think a year from now FOMO is going to be even worse. It's going to be that much harder. And people are going to be I guess I need to go investigate something else because real estate is now out of reach. Now, all of this, right, boils down to the plan and your goals and what is best for you. And that's where you and I are always saying to people, talk to someone that you trust. Speak to a professional who is in the trenches every day like you are and does this for a living. Work with a coach like myself who is going to help you come up with a plan of how to meet your investment goals, right? FOMO is not a good reason to go out and buy real estate. It could be a reason to motivate you if you've been waiting to do this anyway, but it shouldn't be the only reason that you go out. I see you nodding your head. Obviously, you agree with this, right, Omar?
Absolutely. If it's in the plans for you, then you need to take action. if don't do it because everybody else is doing it. Don't be a follower in the herd. But if it's part of your, if it's a part of your plan, you should take action. I mean, I'm seeing personally, Brian, lots of my clients are in the same position, and that's the kind of advice that I always give them. And some people are getting very resourceful. Some people are saying, well, I can buy something with somebody else as a partner, as an investment property. Some people are going to their parents and saying, hey, why don't you invest in my property and I'll pay you back in this way. So it's like people need to get resourceful because it's getting harder and harder, and there will always be a way. There will always be a barrier of entry and a starting point for people. So it's always going to be there. But if you are thinking about adding real estate into your portfolio of investments, you should act on it right away. You're either in or you're not in. Don't be in that limbo in between where you're going through, the stress of like, should I or could I? The other point that I want to emphasize here in this video is that detachment that we talked about, that detachment between prices of properties and income. In today's world and market, equity speaks larger or louder than income, right? And that's the key thing that we've been seeing with our clients. When we're working with a first-time buyer, we're competing against people that are a lot more resourceful. And when we're working with, people who own property, it's much easier for them. So get into the business, get into the industry, get into the real estate market if that's a part of your plans. And like Brian said, always look for somebody who's got the experience or somebody who's working in the industry to get more information before you take a step forward. Yeah,
the best time to plant an oak tree was 20 years ago. The second best time is today. So reach out, book a call with either of us, find out if this fits in with your plans, and then create that strategic step-by-step process to make it happen. And that's it, folks. I think we can wrap up for this episode. I hope you guys found this valuable, and until the next week, we'll see you then.